Hello and welcome to Easynomics. I'm Siddharth Zarabi and joining me today to discuss the prospects of what the latest numbers for GDP growth in the third quarter are likely to be are two noted economists, Indranil Pan, Chief Economist at Yes Bank, and Sunil Sinha, who is a senior economist. Welcome to the show. I start with you, Indranil, first in terms of what's your own estimate for third quarter growth, because we've seen the previous numbers and there is a sense and expectation that there's been a bit of a recovery.
Yeah, obviously, I think from an optics perspective, also a 5.4 was relatively a base number that we saw. And moving into the third quarter, this was also a period of the festive demand, plus the rains abated, and that's one of the reason why the economic activity has or has slightly improved. And capital expenditures of the government has also ticked up during this period to make up for the slack of the sort of momentum, loss of momentum in the initial part of the year during the elections. So headline number for GDP for us is a 6.3% from a 5.4% in the previous quarter.
Sunil, what numbers are you working with?
Yeah, as Indranil said, obviously the third quarter is going to be much better than second quarter, and my expectation is that it will be a little above 6%. So 6.1% is what my estimate says.
Okay, let's try and bring up on screen the poll that we have of many other organizations. Look at the range on your screen, viewers, from 5.9%. On this plate, you can see Nomura going up to 6.2. Let's move to the next plate, and you will see further numbers. State Bank of India going even a tad higher to 6.3, ICRA at 6.4, Barclays at 6.4, and the outlier really seems to be the 6.7% estimate that you also see on the screen, viewers. Indranil, I'm coming to you. In terms of the key elements where some amount of recovery may have taken, including perhaps capital expenditure and government spending, because the elections are well behind us and there has been some amount of focus from various ministries. What would you say are the reasons for the likely revival?
So, from the expenditure side, as you rightly pointed out, there was a bit of an uptick that we saw in terms of the capital expenditures of the government. So that probably has boosted the gross fixed capital formation. Because this was also a festive period and rains had abated, consumption demand also would have relatively been better from the second quarter. On the production side, I think the critical number that we are looking at is number one, the agricultural growth, where we are all informed that the agricultural growth for this year has been positive, and that is on the back of good monsoons. So that's number one. And the second number that we are very keenly looking at is the manufacturing sector. Now, manufacturing growth had actually slumped to 2.2% in Q2, and we see a relative recovery over there. However, having said that, I think we are not really seeing a significant momentum in terms of the top line growth, but the expenditures have contracted quite significantly to have provided a boost in terms of the profitability of the companies. So that's the reason why from the GVA side or the production side, manufacturing sort of sector is likely to have performed better in the Q3 compared to the Q2. On the services side of the production side, I think what we have estimated is a relatively flat number, not much to really talk about over there. But I think these are the key elements which we are looking at to provide the upside in terms of the GDP numbers from the 5.4% of the last quarter.
Sunil, what's your reading of how the rural economy is doing? There are some comments which say that rural demand continues to remain strong? I think we seem to have lost our connection with Sunil. Indranil, I'll take that question to you. What about rural demand? What are you picking up as far as the rural economy is concerned?
One, I think it's a direct impact of the higher agricultural production, which should have a beneficial impact on the rural growth. Having said that, however, in the first couple of months of the quarter, we had inflation relatively on the higher side. And that relatively would have sort of reduced the consumption boost that we were expecting on the rural side because of the higher agricultural production. The other factor, however, is which is I think slightly difficult to prove in terms of the data. But if I look at more the subprime type of borrowers, and that's what comes out from the Reserve Bank of India, there are sort of signs of stress in terms of the debt in the rural areas. So any uptick in the income levels would also possibly be used in parts to actually sort of repay for previous debts. So rural demand is relatively on the positive side, but I don't think it is likely to take up the slack that probably the urban demand has left after a few quarters of relatively much healthier growth. So I think that's the dynamics that is playing out on the demand side story.
Uh, Sunil, you are back with us, and if you can hear me, I just wanted to understand for the benefit of our viewers your reading of how the rural economy is performing.
Rural economy is concerned, obviously, it has been down and out for some time, and with the good monsoon and festival season, there was expectation that some bit of revival probably will happen in the rural consumption. And some of the indications which are more in terms of anecdotal, they do indicate that there has been some pickup. But these pickups are more, seasonal in nature, and it's unlikely to last maybe for the remaining part of the year. So a bit of, uptick in terms of rural consumption due to festival season, as well as because of the some revenue coming post harvest to the farmers. So that is visible, but as I said, I mean, the larger question is that such kind of uptick, will it survive? Will it be more durable in nature? That do not seems to be the case right now. So we will have to really wait and watch how the rural consumption pans out, because given the fact that the I mean, overall, winter has been also lackadaisical in the northwestern part of India, where the major crop wheat is a very, very important crop, both in terms of food security as well as food inflation. So there has been some bit of concern because of the heat wave that is being faced in the northern region, which can actually have an implication for wheat productivity. So all of that taken into account, my own sense is that we'll have to wait and watch so far as rural demand is concerned.
Indranil, one of the elements that seems to have contributed to the slowdown that we have seen was the RBI's pretty proactive measures to cool down unsecured personal loan growth, and you've seen how that number has fallen and impacted discretionary spending. Are you seeing any change there, or does it continue to remain on a declining trend?
I think the unsecured loan definitely had been a problem for the Reserve Bank of India. But having said that, if I really look at the CD ratio of the banking sector, that's still quite high at 80. The incremental CD ratio, as reported by the State of the Economy, still is at 90. And therefore, I think from a more broader financial markets perspective, we need a little bit of a more cooling before the RBI could be comfortable over there. So I did mention to you that there are some pockets of stress possibly within the rural segment, and clearly indications from the data that comes out from the Reserve Bank of India, especially in the financial stability report, is that somebody at who is taking a loan of less than 50,000 rupees possibly has three more loans in his name at the time of the origination of the fourth loan. So these are some of the factors that still may be a bit of a bother, and we might still see some amount of sort of iron grip in terms of the risk weightages from the RBI on these unsecured loans. So from that perspective, it may not be a very smooth journey in terms of the reduction in the interest rates by the Reserve Bank of India and the upside that one would have otherwise expected from the monetary policy accommodation on the growth side.
Sunil, will the Reserve Bank of India seeming to pause, rethink its risk weights that it was trying to push through, will that also have a positive impact going forward as far as overall lending is concerned and consequently consumption?
Well, I mean, if I look at the policy and, I mean, at least I was surprised by the rate cut which was announced in the policy in the month of February. Mainly because, I still believe that there are still many ifs and buts with respect to the trajectory of inflation. And in the past also, we have seen time and again that the kind of projections that RBI has made has really not hold up to the real numbers, not because of any other reason, but due to, weather shocks or something which you cannot anticipate. And these are black swan events. I would have liked RBI to wait at least till April so that at least the first, estimate or projection about how the monsoon is going to behave in the current calendar year becomes known to us, and then maybe would have taken the decision. But they seem to have, followed the budget where the finance minister announced some concession to boost the consumption demand. So maybe, I mean, that was something which RBI felt would be important for them to also look at the growth along with, the whole inflation trajectory. And their inflation trajectory is obviously such that now it comes very close to their target level. But on the whole, my own sense is that going forward, reducing the rate in every policy meet probably will not be possible. And as I said earlier, that there is a bit of concern with respect to the wheat output in the northwestern region of the country. So net, the inflation and inflationary pressure would remain in the system. And one will have to really, sense it very sensibly. And although RBI says that their policy stance is neutral, so they can move either way, but having reduced the policy rate once, it will be very difficult for them to immediately increase it. So probably, I mean, if inflationary pressure increases, then they will remain in a pause mode, as has been the case in the past also.
Indranil, government spending, which accounts for 28-29% of GDP, the decline really started last May, and we've seen its impact. I want to ask a broader question. How long do you think will it take for that complete impact to wither away? That decline that we saw centered around the elections, and we are still 4 odd months away from the first anniversary. of that election. By when do you think it will completely go away?
So first point is I think the central government spending has actually picked up on the capital side, especially for November and December. It had definitely picked up, and some amount of slack has therefore been taken care of. Now, if you look at the revised estimate in terms of the capital expenditures of the central government, it has been lower than the budgeted expenditure numbers that was there for FY25. But now, if I look at the FY26, the absolute number in terms of the capital expenditure is now equivalent to the FY25 budgeted expenditure number. So therefore, the point that I'm trying to make is that definitely there will be an upside in terms of how capital expenditures of the government will once again start influencing the GDP positively. But on the other side, we also have a situation where India in FY26 will be in a situation where the rest of the world growth has slowed down. The rest of the world, the atmosphere in terms of the policy and the uncertainty with respect to Trump tariffs have increased, and that's one of the reasons why we will possibly not get the full benefits of the capital expenditure in terms of the headline GDP number, because there are certain other segments of the GDP which might actually be slowing down. So that is something that remains quite important. And having said that, I think obviously the government is also reaching some limits in terms of how they can boost capital expenditure, and therefore other policies that has been sort of incorporated, and especially with respect to the boost that they have provided for the MSME segment, should in the medium to long term sustain the economic momentum for India. May not be at an 8% level, but at least at a 6.75 to a 7% level is what we would be possibly hoping for.
Sunil, at this stage, given the data available and the fact that we will get the latest data tomorrow, what's your sense about the possibility of meeting the 6.4% full year growth target? Are we going to achieve, or will we likely miss that?
Well, I mean, much would, of course, depend upon as to what numbers do we get tomorrow so far as third quarter GDP is concerned. But my own hunch is that the way things have panned out so far, from first quarter to second quarter and now to the third quarter, and now that we are almost ending with February, only 1 month left, my own sense is that even getting to 6.4 may be a tough job, simply because the kind of dip we saw in the second quarter. See, the onus is then on the third and fourth quarter to cover it up and push it to a level that it reaches to 6.4%. So at least the third quarter, indicators, high frequency indicators, do not give me that kind of a confidence. And much would then, of course, depend on the fourth quarter numbers. And that also, I mean, in my view, would not be able to push the overall GDP growth to 6.4% for the entire year, is what I believe.
Indranil, the prospects of a hit to India's growth from any tariffs the United States may eventually choose to impose, and we know that we are in negotiation with them, and the intent of the government is to prevent any shocks on that front. But were that scenario likely to play out, would it be fair to argue that that would then feed into our growth numbers from the next fiscal, particularly first and second quarter onwards?
Yeah, I think a fair point in the sense that obviously we are looking at some of the very critical exports that we do to the US. And we had been doing some numbers, and broadly, just to bring out the sort of headline in terms of the analysis that we did. we are looking at a GDP direct impact of the tariff, which actually impacts your exports to shave off GDP by say about 0.2 to 0.7% at the outside. So that is the range that we are looking at. Having said that, I think the other indirect impact is, and we still don't have any critical view over there, in terms of what happens if there is some amount of dumping that happens from China, especially steel, into India. And that, to a certain extent, while it brings down the prices of steel, which goes into the construction sector for India, it might actually lead to also reduce production from the manufacturers within India. And therefore, the critical factor here is that how the government actually fights against this in terms of being able to raise anti-dumping duties, and therefore what is the consequent reaction of that from the global trade atmosphere. So broadly, I think there is definitely a risk of about say a zero point 0.3 to a 0.8% in terms of the GDP to play out because of these tariff risks. But as you rightly said, we are into negotiations, and India's trade surplus with the US is just about 43-45 billion dollars, much lower than the critical focal points in terms of say a China, Mexico, and a Canada, where the trade surplus that these countries run with US is much higher. And therefore, in terms of the pecking order, India may be relatively lower. And as you again rightly said, we are trying to come across with a deal with them in terms of higher imports of food commodities, in terms of defense purchases, which will probably enable a reduction in the trade surplus that India runs with the US.
Absolutely, viewers. The numbers will be out tomorrow, same time, and we will, of course, bring you the live numbers and also analysis and expert comments. But it's very clear that a pivotal moment as far as domestic growth is concerned, but the prospects of what happens in global trade will be the bigger factor to watch out for as far as the overall macroeconomy of the country is concerned. Indranil Pan and Sunil Sinha, thank you very much for your time with us today. With that, it's a wrap on this episode of Easynomics. We'll be back with more. Until then, goodbye.
Mahakumbh Mela, which began